Welcome back. You're watching us here on Halftime Report. Absolutely flat for the Nifty. It's been that kind of day. It's been extremely volatile. Opened with a cut, then rallied, and then now we're off the highs and both off the lows as well. The Nifty, is at an interesting point where we are right now. It's off the highs of today's trading session, of which was 17,976. So levels closer to 18,000 are finding some sort of supply. But where we are right now is just around that 100-day moving average of 17,906. And we're off the December lows as well. 17,774 is an important mark we have to watch out for. And the fact that we've sold off from the highs and we're still off the lows gives strength both to bulls as well as bears to go ahead and write options, especially when it is weekly options expiry tomorrow. So the 17,800 put, that comes up for you. That's seen a fair amount of writing, almost 40 lakh shares being written for a premium of 30 rupees. So that's selling you 17,770, which again coincides with the December low, would be an important support to watch out for. On the way up, however, our inability to cross past that 18,000 mark has given a lot of these 17,900 and 18,000 call writers a fair amount of ammunition. So 17,900 call has added 40 lakh shares in open interest. 18,000 call has added about 22 lakh shares in open interest. 45 rupees is the premium on 18,000 call. Tomorrow is the weekly options expiry. So we also look at what straddle writers are doing. A straddle is a call and a put together. So those who are writing 17,900 call, which seems to be the most active strike right now and also closest to where we are on the Nifty, the premium is 150 odd rupees. So what does this mean? That the option writers for tomorrow are playing for a range anywhere between 17,750 to around 18,050 on the way up for the Nifty. On the way up, however, if we do cross past that 18,000 mark, we may see some short covering because of the call writing that we saw yesterday. How far will that short covering go? The Nifty 20-day moving average is 18,159. And importantly, the Nifty Bank, which is leading the charge, has its 50-day moving average at 42,711, which could be an important resistance to watch out for.
Okay, 18,159 is the 20-day moving average and the 50-day at 18,307, a while away currently based on the levels that we see for the Nifty. Thanks, Manglam, for that. Ashish Kyal of Wave Strategy joins in now to discuss the technicals and what he is looking at in terms of key opportunities in the market. Ashish, hi, welcome to the show. Well, there has been a recovery which we've seen in the mid-caps from the lows. We've seen the Bank Nifty also managing to hold up. But overall, what would your call be? Because it's been choppy in the past couple of days.
Yes, absolutely. If you look at the overall movement of the market, it has been a lot of volatility, but within a range. So even if it went sharply upside, we can see 18,100 levels were touched about 2-3 days back, and again it went sharply downside. And today itself is a very high volatile movement. We can clearly see Nifty touching the low of around 17,820, 830, bouncing back from there 17,980. So having said that, it looks like we are stuck in a range with a very high volatility. So this is essentially an option seller's market, right? Like Manglam was also pointing out. What is important to also observe is that 18,000 call open interest has increased sharply, and 18,000 put we can clearly see unwinding is happening. So for Nifty to cross that 18,020, 18,030 is very essential. That can lead to short covering, and we can move up towards that 18,100, 120 level. So 17,980 to 18,000 is where I am keeping a watch if it can manage to cross that level or not. And on the downside, very important support where Nifty halted today is 17,830. So that's the broad range. And within this broad range, I'm more biased that there is a possibility of a breakout to come soon, maybe at a later part of the day. But the direction I'm not going to bet on in which direction. So if it goes below 17,820, I'll be looking for short positions for a move towards 17,700 levels. Keeping 7980 as the stop. So that's the range that I'm looking at right now on Nifty.
Okay, so that's the range that you're looking as far as the benchmark is concerned. Individual technical picks, Ashish, what would that be?
We can see some traction on the technology stocks. Sterlite Tech is the first peak after a lot of consolidation. There is a possibility this mid-cap stock can give a good breakout on the upside. It is some time. The volumes are huge enough. So looking like a good volume and breakout should now follow. So one can create long position in Sterlite Tech, keeping a stop loss of 166.60 for the target of 185. And the next stock on the buy side is going to be Timken India. Again, the stock has retraced nearly around 76% of its prior rise, and now showing a good morning star pattern reverse from there in today's session, good volumes pickup. So we can again move back towards the level of 3325 on the upside. So Timken India, long positions can be created. Stop loss is going to be around 2,990 for the target of 3325.
All right, Ashish. Thanks a lot for joining in and giving us your views. With that, we'll simply a short break. On the other side, when we return, we will get you comments coming in from the management of Grief Scott. Our colleague Danish Anand spoke to him, and this on the sidelines of the Auto Expo 2023.